My name is Nafisa Biku, and I'm a program manager at 2X Global. So a bit of context about 2X Global. It's an ecosystem and field building organization. We're a membership organization, so most of our members are either private equity funds, DFIs, multilaterals. We have a few VC funds and big asset management players. And 2X Global is really created to sort of move the field of gender lens investing forward. And it's been a sort of fully fledged organization for just over 2 years now. And we do sort of have three main programmatic areas, of which advancing standards is probably our main one. And this is really looking at how do we advance the standards through benchmarking and framework development for gender lens investing.
Yes, and what is exactly GLI?
So from the perspective of 2X Global, we look at gender lens investing as looking at the entire value chain, trying to establish what gender smart activities look like from both sort of a fund manager and investment perspective, but also working with companies and looking at how they implement gender smart activities, which it's more than just how many women you have on your board. It's looking across product development and service delivery, as well as spheres of management and how you sort of embracing women leadership and women-led ventures.
No, thank you. And Leila, maybe sharing your story.
Is it? Yeah? Okay, perfect. My name is Leila Charles. I'm an investment manager at British International Investment, so also known as BI. BI is the UK development finance institution, so we have about 8 billion in total assets. We invest in Africa, Asia, and the Caribbean in the private sector. And really our objective is to be able to develop sustainable, inclusive economies. So we invest across asset classes and across sectors. So I personally sit in a team at BI called Intermediated Financial Services, and our mandate is really to partner with intermediaries, whether these are fund managers or banks or other financial institutions, to really support increase supply of credit in our market. So we come in as an LP into credit funds. We also enter into risk transfer, risk sharing transaction with banks to support them with on lending. So I think from my perspective, also within the financial services group, I lead on some gender finance initiatives.
Thank you. And Nyeji?
Hi, everyone. My name is Nyeji Muhango. I am managing partner for WCAP Limited, which is an investment management firm located in Lusaka, Zambia. And what we do is invest in innovative businesses within the Southern Africa region that offer climate solutions to tackle the climate problem that currently exists. And a large majority of these companies happen to be women-owned or women-led. At the moment, we're currently deploying funds into Zambia and Namibia. Our focus is also into South Africa, but on an opportunistic basis. We offer both debt and equity, quasi-equity instruments to the companies that we invest in. And we invest across all the climate verticals with a particular emphasis on sustainable agriculture, sustainable manufacturing. We do like renewables, circular economy as well. Thank you.
Thank you. Cindy?
Thank you. My name is Cindy Mabasokoyana. I come from AIH Capital. It's a 100% Black women-owned and run private equity firm. I think for us, really, it's not about witnessing the impact that gender lens investing, can do in transforming, but we are, an example of that as a women-led private equity firm. I mean, in a country where to be intentional about making sure that there are structural changes in allowing that, we came about through the importance of our country, promulgating laws around economic transformation, which had to have carve-outs for women, especially the financial sector, that had a charter that said for financial inclusivity, it required financial institutions, pension funds to carve out capital for women-led fund managers. So we are a product of intentional gender lens investing. We are sector agnostic, and our focus really is in some of the fast-growing industries, in particular those that we believe need women, for them to be transformed. So I mean, you've got sectors where a large contingent of women are mainly workers, and our role is to make sure through the funding that we have is to make sure that we are shareholders and also in leading roles in these businesses. Thanks.
Thank you.
Good afternoon, everybody. My name is Andrea Chakava. I'm the managing partner of a fund called AFRICHELA, which is promoted by the Grasham Michelle Trust. At the Trust, we feel like we have a 360 approach to women economic advancement. We've been building networks and supporting the growth of women's networks across the continent. These networks have been sector-based. They've been sort of mandate-based. So we have a network of women in finance to basically improve the visibility and the knowledge of women in finance. I'm a product of that. We've also been building the capacity of women entrepreneurs across the continent. We started with mindset, and now we're doubling down with access to finance and access to markets. And that is where AFRICHELA actually became born, because of all the interaction that we had with the particular women, whether it was through our networks and whether it was through our enterprise development program, about the challenges when it came to accessing finance. So this is a demand-led solution where we have basically designed our offering based on the gaps that we witnessed amongst the women within our community, to make sure that we're basically creating capital that is fit for purpose and bringing in a lot of women that had self-excluded themselves from basically obtaining the capital that there is. So we're sector agnostic. We operate in 6 African countries, 4 in East African region, Kenya, Uganda, Tanzania, and Rwanda, and 2 in Southern Africa, which is South Africa and Zambia.
Yeah, and Andia, maybe staying a little bit with you, and you mentioned, the challenge, access to capital, it's a huge barrier. Can you share maybe your investment approach and the sectors and how you develop your investment philosophy?
Yes, so we developed our investment philosophy based on the reasons why there's, I think it used to be 42, maybe it's a 48 billion financing gap. And we found that a lot of the traditional financing was expecting women to have collateral, and we found that when women themselves also had collateral, they were not offering this collateral up. So we had to find a different mechanism on which we could basically encourage women to put up their hand, and part of that was building a relationship through technical assistance, getting women to understand exactly what was expected from them, and also identifying the parties that wanted to scale their businesses. There are many people that are comfortable being their mom and pop shop, which is fine. Once we identified those businesses, then we were able to basically put financial instruments that match those goals, and one of them is impact-linked loans that we have, where we basically reward enterprises for delivering certain impact goals. And this is, if you're interfacing with youth, we have an opportunity for us to employ a lot of youth. If you're basically having roles that get people that are earning more than a living wage, there's stability of income in that particular job creation we're talking about. You're able to interface with marginalized communities and bring them into the value chain. We've been able to see a lot of creative products, manufacturing, that have been able to transform communities just by having this deliberate approach. And that's how we've looked at it when we're engaging with a lot of women and also focusing on those women that are operating in male-dominated sectors, just like my colleague said, making sure that they come out as visible, they become the mentors and the spotlights for other women to now actually put their hands in the field. So we have women we support, whether they're in security, whether they're in manufacturing, whether they're in financial services.
No, thank you. And it's very interesting to link it to Nieji's viewpoint, because you have a viewpoint that it goes from venture capital to climate change and obviously gender, the gender instances. So maybe that's something that I'd like to know, how this triage works.
Okay, so we created a structure in response to what we saw was happening within the Southern African region with respect to climate change. We observed that there's been a rising demand in climate companies that are offering climate solutions, but we saw that there was a gap in the market. Most of them were failing to raise funds in order for them to either adapt or implement what they wanted to do with respect to climate change. So we made a deliberate effort to create a funding mechanism that also applies a gender lens towards its investment process to meet the demand for this particular type of company and also meet the gap with respect to financing, climate financing. I think there's a number out there that says there's a $277 billion climate financing gap per annum required in order to reach the 2030 climate goals within the region. So we feel that this funding mechanism that we've created is something that's appropriate for what the market requires, and that's how we have linked all three.
Definitely, and maybe going to another asset class, super fascinating, Leila, private credit. What's the role of private credit within GLI and in Africa?
So I would say that more broadly, before zooming into private credit, so at BI, I think BI was one of the key DFIs supporting the launch of the 2X Challenge back in 2018. So for us, GLI is not new, and we effectively have a corporate objective to commit 25% of our total investment to be 2X qualifying. Therefore, supporting gender finance through those investments. So this is effectively quite important. So we also have a dedicated gender and diversity team that really ensures that we take a very holistic approach in the way that we're looking at gender finance more specifically. And then if I zoom into private credit, I think when it comes to private credit specifically, to be honest, there's nothing. We can take a step back and think about the asset class more broadly and not just gender. I think the reality in Africa is that we're going through an evolution right now where private debt is relatively nascent. We still have banks that are finishing their transition to IFRS 9 or Basel III implementation, and what that means is that we are seeing a gap of financing in the market as banks retrench from lending. And what that means is that it creates opportunities for emerging managers to come through. So we've seen this, and I think it's been quite encouraging to also see female-led, women-led funds emerging and looking to address that issue in our markets. And I think, so obviously the broader landscape is one that is relatively nascent, and I think as a DFI, we do see ourselves playing a role, just not only providing the capital, but also doing part of that capacity building to support those managers in adopting best practices, but also hopefully building the track record that is needed to attract commercial capital eventually down the line.
To the best practices. Nafisa, what broader trends do you see, and especially in gender lens investing, of course, and the business practices related to those?
So I think the broader trends we've seen at 2X, probably about, I'd say, three main trends. The first one is really, and my panelists can attest to this, the rise in women-led ventures. And this is really a top-down thing. So starting from the DFIs as well, of this need and want to invest in more female-led ventures, and both at the sort of company level, but also the fund manager level. The second one is metrics, and Leila, you touched on the 2X Challenge And the 2X challenge was sort of this call to action around how do you direct capital towards gender lens investing, and the implementation of the 2X criteria, which sort of set the benchmark for what does gender lens investing look like at a basic level, and can you put a framework around that and start measuring it. And moving on from that, there's also the 2X certification, which is one step beyond that, and trying to develop a more rigorous yet pragmatic approach to benchmarking and framing what gender lens investing is. And then the third one is really not just looking at, say, a tick box exercise around how many women do you have in senior leadership, or sort of a diversity quota, but really looking at the entire value chain, and investors starting to look at how they can create more equity, but also put that commercial lens across the entire value chain.
So because having presence doesn't mean necessarily having a voice. And you empower women through your investments in this. So you give voice to these women, but how do you do your due diligence? How do you select your portfolio companies?
Yeah, so as indicated, being sector agnostic, I think for us, what was important in our country is to be able to identify those sectors that we believe bringing women will have an impact, because generally people will confuse us thinking we invest in women in businesses because we say we are a 100% black women-owned, black women-run private equity firm, and we say no, we actually bring the diversity and inclusivity that is needed in the different businesses. We take significant minority stakes. We will ask for a seat on the board. And by the way, I didn't say that I am from South Africa, and because the origins of our private equity were an NPO where we were focused on building finance skills in our country. So most of our shareholders in our private equity firm are black women chartered accountants. So in the early 2000s, we focused on getting that girl child, number one, to come into a profession that was generally unknown. I mean, the history of South Africa, we were not in these kind of professions. So our work was really on the ground, very community-based. So by the time now we identify investments that we want to come in, we play a very strong governance role. We play a very strong, growth perspective in identifying products which are basically have a gender lens. In the financial services, for example, we've looked at some insurance products that have got a gender, which are gender focused. In fact, one investment product in the country which people were wondering if it's going to get anywhere was First for Women. It's an insurance, short-term insurance product that only insures short-term insurance for women, and now it does have an element of long-term insurance. And the question was, will this be a viable business? Actually, it's one of the most profitable businesses. We are invested in one of these insurance houses. So for us, really, if you look at what the stats that MasterCard Foundation and McKinsey have said, it's going to unlock about 12 trillion. It sounds like a staggering number, $12 trillion US in GDP growth globally, to actually make sure that there are strategic and structural changes for gender lens investing, and $287 million of that is just in the continent. And so I think for us, really, what this has enabled us is not only to play this role in a South Africa that was largely white in corporate, but it has enabled us to have funding and capital, because in some instances you will find that relying on vendor-financed deals almost incapacitate you because it will take about 10 years relying on dividends. And in that case, you know, if an organization doesn't declare dividends, it means your investment actually continues to be bonded. So the private equity fund for us has really been a value unlock, and also the support that we get from your USAID, from the South African Venture Capital. They've got a women element in it, a few programs that support women fund managers, because it's one thing, again, to have the access to capital, but how do you navigate the journey of private equity? How do you manage exits? How do you manage identifying growth in these companies such that you can see the returns at the end of the investment period?
And exits being maybe, you know, difficult to manage also from a GLI perspective.
Exactly, exits are always a challenge, but I guess with that, you know, capacity building and developmental programs, we are guided around you get into an investment with a plan of how you are going to exit in private equity.
And that helps to shape the narrative and build a stronger, you know, story about GLI. And Andia, how do you measure impact? And do you have maybe nice stories to share with us?
Yes, so from impact, I think we look at a variety of ways that we perceive impact. I think one of them is how are we basically improving the business better than we found it. One of the areas that we've been seeing is helping women deal with succession planning. We've seen a lot of businesses take what we call pause breaks simply because the women entrepreneurs themselves were in a childbearing stage, and there was nobody there to continue to push the business. So when we support the business there with that particular talent, we're able to balance the business so that the business doesn't necessarily slump because of what is happening. So we encourage a lot of flexibility for us if the entrepreneur themselves is somebody that's working from home, or we see that as a way of promoting flexibility. We also look at impact in terms of the product and service that is offered. We have a lot of our entrepreneurs that are practicing innovations in the industry. They're dealing with sort of female-specific problems. So we've had one that basically innovated an incinerator to get rid of the waste that comes from sanitary towels that were basically blocking, I would say, pit latrines because people don't have toilets, and creating a really bad stench in schools. And once the incinerator came on board, it basically takes it to dust. And this was so innovative. They won Kenya Innovative Week, and it was the same product that was used to basically destroy the PPE material during COVID. So we found that something that came out of a practical gap in the market was something that was able to be reused across the board. We also look at impact from an intersectionality lens. So we want to make sure that the business goes beyond itself. It's also supporting the community. So we have one of our entrepreneurs that's basically driving potato seeds. So when KFC first came into the market, they were importing potatoes, and there was a big hoobaloo. How can they come to the market and import? And a lot of it had to do with the quality and the lack of standardization and just the volume. And instead of just being a potato farmer, this particular entrepreneur, and she's a mature entrepreneur, she's over 45, is basically doing the seed, distributing the seed to other farmers and working with the government. And to the extent that she's working with over 4,000, 5,000 farmers and producing the seed, and the volumes are more just because of the productivity. Instead of reusing potatoes and replanting that has a very low yield. When you use fresh seed, then you can actually increase that yield. So we look at the impact of what the business itself is doing, how that business can create jobs, how it can change the narrative, whether it is a food security, whether it's just the role that the women are playing, just practically being in that field, and elevate that so that we can encourage more women to go into entrepreneurship. And I think the message as I'm telling these impact stories is that these businesses are all profitable, they're all, should I say, bankable, they all have returns that are investable. So we're just focusing on the impact, but I just want to make sure that the audience is not thinking that there is impact but there's no return.
Yeah, thanks for the clarification. And Yeji, I think you would share same stories right on the VC, and especially this delicate relation and powerful relation between climate change and gender diversity. So maybe if you have any stories to share on the VC space.
So just to correct you, we are doing early stage investments, not necessarily VC. I'm told VC is purely tech-based. So we recently concluded a transaction into a company called Luano Food Company. They are an agribusiness firm that produces sustainably sourced honey and produces organic avocado oil. We recently invested $350,000 into the business in order for them to diversify into the avocado segment. I'm pleased to say they're one of the first movers in the market, and now they're feeding into a multinational value chain in the EU for avocado, and they're now, I think, feeding into another one in the US for their organic honey. This particular business is really interesting because not only are there financial returns, but like Andrea said, there are social or impact-driven returns. On the impact side, I would say that about 3,000 smallholder farmers have been impacted by this particular business. Some of them on the honey production side by transferring sustainable agricultural practices. And I believe the company has also unlocked a significant number for carbon credits that they are then passing on to smallholder farmers. On the avocado side, they've done the same thing and created a cooperative, I think, of about 1,000 members. In both cases, these cooperatives have more than 60% of women and youth being the beneficiaries of these of Luano Honey's activities. On the financial side, we predict that this company will, so far we've seen very significant growth in just the last few months, but we're seeing, I think in the next 24 months, something like 3x back on what we've given them. Our goal is to stay with them. We'll see. We do have an exit strategy that we have aligned with them, and this strategy hinges on the both financial and impact-driven KPIs that we've given for them to perform to reach, and we have been in discussions with them already. So it's either they will be acquired or there will be a private equity fund that will take them on. But we've also been talking to them about going onto the Lusaka Stock Exchange as an alternatively listed entity that can then go on and raise additional capital. In our markets, I don't think there's a lot of information that goes out to the SMEs on the potential that they can, the potential financing that they can raise from the stock exchange. And I think driving this agenda with the SMEs will do something to stimulate the activity within capital markets and sort of address this perception that people seem to have that there aren't any exits on the continent. But I think we need to drive them as the capital allocators and create the transactions that we want to see.
So you would envisage a stronger, exit strategies instead, as opposed to going public. That's the yes.
So with respect to a small and medium enterprise, the entry strategy would be to do an alternative market listing or a B listing, and then eventually upgrade to a full IPO status. And for us in our country, the requirements are not as stringent as people think. I think that's also the perception of the private sector, that there are all these regulations that they need to meet in order to ascend to the capital markets, but that's not really the case, not in the Zambian case anyway. The same requirements we have for entering our funds is the same requirement that the Lusaka Stock Exchange has for entry-level SMEs.
Oh, that would deserve a separate panel, super fascinating with all the differences with other countries. But maybe, Leila, you would like to conclude with some example from your side, because it's very peculiar. Before we talked about the certification process, which is very interesting. So maybe you'd like to share your stories.
Sure. So within the financial services group, I mean, we have a suite of products, but maybe one of the key products that we've developed in recent years is our directed lending. So where we effectively provide credit to financial institutions, but where the use of proceeds is quite specific. So in the case of gender, it would be to support on lending to women-owned or 2X qualifying SMEs. So we have partnered with a number of banks, and maybe one example to call out is an investment or a loan that we've actually made to First Bank of Nigeria. So it was like $30 million, which was directed. And alongside this, I think, and this is quite important, we've also provided a technical assistance package, which was designed to really support them figure out how to improve their reporting when it comes to gender-specific KPIs or criteria, and also to do a bit more thinking around refining a gender-specific product or loan product that they're launching to female SMEs. So with that, and hopefully some additional capital that they've raised, our expectation is, or the goal at least, is for them to add an additional like 50,000 SMEs through to their book. So that's one example. I won't spend too much time, but I think alongside this, we also work quite extensively with the managers that we back to get them to, through action plans, through other commitments, to really get them to improve diversity, at the firm level, but also start thinking about how they can launch 2X at the portfolio level as well.
Yeah, thank you. And Nafisa, to you, because if you want to go serious on GLI, you need to have standards, you need to have processes, you need to know where to go. And I found it extremely fascinating, the story about certification and allowing also the investors to having the tool to be able to make the right investments. So maybe you want to talk about that project.
Yeah, so this really came out of starting with the 2X criteria, which Leila's familiar with, and there was a lot of feedback from the market that there needed to be something a lot more rigorous, and because with the criteria, it's a basic framework which then can be adapted in certain ways. So over the last year and a half, 2X has been working with various stakeholders, over 600 stakeholders, to develop this independent 2X certification mechanism. And it's an independently verified certification mechanism. It was launched 2 weeks ago for funds and companies at the moment. And it's you can get certified currently across 3 levels, which is good, advanced, best in class. And the value is that the good level aligns with what the 2X criteria is, and beyond that, you're really going deep across the specific dimensions that the 2X criteria puts forward. So it might be leadership, employment, supply chain, products and services, but also governance and accountability. And at the core of it is this intentionality aspect. So getting funds and companies to really commit over a certain time period to advancing gender smart activities across their dimensions. So yeah, it was quite an exciting moment for 2X when we launched that, but it's quite a rigorous standard, and with the backing of BII mainly, who's had quite a big input into it, but so that's really trying to advance the standards in a way where it can be used for funds and companies, particularly to get investment. We actually ran a pilot at the beginning of the year. It was 3 funds and 2 companies who were the first entities to get certified. And one of the funds that was 2X certified, Verod, actually was able to unlock a technical assistance grant from FMO based on that certification. So we are really seeing a shift in using the standards to move the field forward.
Yeah, but mostly needed indeed. So yeah, thank you. Before I go to the last question, 5 minutes, okay, thank you. Any questions from the audience?
Thank you for the very interesting panel. I had a question maybe to Cindy or Neji regarding exit strategy. How do you ensure that, I mean, the exit strategy will remain with this women lens? I mean, when you do have investors that will come in, I mean, that want to buy, I mean, part of the shares, whatever, how are you sure that, I mean, or do you have concrete experiences already that show that, I mean, either it's a big issue, it's difficult to find new women interested investors, or do you have to make some compromises? I mean, what the beginning is difficult, but I mean, the exit is also another big issue because you can see big differences.
And that has become one of the big issues as well in South Africa, because largely businesses need to be transformed to even do business in the country, in particular with government. So once we've come in as a woman partner, there's an expectation that will be there, you know, forever, so that they continue to have this license to operate. So what normally happens, because generally to find 100% black woman owned is a bonus, because you've got points for being black, and then women element is also rewarded greatly in our country. So what we normally do is to actually say upfront that it will be a majority black woman owned if there's an insistence that we need to make sure that at exit we find another black woman owned entity. We've pushed back quite a bit on that. One of our positives is that before we launch the private equity firm, we actually do have an investment holding, a company which is 100% black, 100% black women owned, where we do have some clauses that give that entity the first right of refusal. But largely, trade buyers are always on the top, because listing is not popular anymore in our country. You're finding a number of listed entities actually delisting, so you can no longer put that as an option of exiting. So trade buyers are the one, another black-owned entity, and you make an effort of saying, we'll do best endeavors. We've had to push back on that and say we'll do best endeavors in finding a buyer that has got a large contingent of black women. Yeah.
Thank you. I don't know if we have the time for another. So I think we came to a closing. I'd like to thank our wonderful speakers. For me, it has been a discovery as well of GLI. And I believe this is just the beginning of a very powerful trend. So thank you, and a big applause to you. Thank you.